Let's get your comment rolling. We are online. We are live everywhere. We're ready to go. So, if you can hear me, say something and we will begin the show that we deserve. The show that we deserve. We got in early today and everybody is late. Let's get your comments rolling, folks, and we will begin the show that we deserve. The show that we deserve. We deserve it. Yes, we do. Yes, we do. Can you hear me? Am I audible? Is there something wrong with my audio? What's going on? I can see viewers, but I can't see comments. Are you being able to comment? Is there something wrong with the whole play? No, it's all. So, what's going on? I can't understand. Let's get your comments rolling, folks. If you can hear me, people on YouTube, people on LinkedIn, if you can hear me, say something. That always reminds me of Pulp Fiction. Everything is perfect, says Mr. Bhandekar, Ashutosh Bhandekar. All right then, let's begin. Bum bum bum, the show that we deserve. Bum 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 bum. Bum 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 bum. Bum 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 bum. Bum bum bum. Bum 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 bum. Good morning, everybody. Welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We are working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, well, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis which don't lead to paralysis right before we punch in. So let's continue with our journey of reading between the lines things that are especially interesting and important in the world of business and finance. Let's go! Oh, but before we go, we got to follow a tradition, right? You know the tradition? The sweet and sacred tradition of the simultaneous sip. We'll all sip something together and it'll bring us good luck, as it always does, without fail. And all you need for the simultaneous sip is a cup or mug, a glass, a tank, a chalice, a stein, a canteen jug, a flask, or a vessel of any kind. Pour it with your favorite liquid. I like hot water with some black pepper in it. And here we go. Beautiful. Let's do it again. Sublime. You know what the simultaneous sip says, right? You know what it says? It says that you are not alone. It says that we are in this together. That's such a beautiful thing to say. Great job on it, by the way. I could feel your sip. I was doing really well. So, with that out of the way, let's begin. So today's Saturday. Today, the first tranche of the rate cut transmission is gonna be active. What that means is that from 4% to 3%, banks CRR is going to be revised, right? And that's going to happen in tranches. So this particular tranche will free up like 62,000 crores. The banking system is sitting at a liquidity of about 3 lakh crores, right? Now, this surplus daily liquidity of the bank will lead to more ability for the banks to actually lend, right? So the rate cut transmission will start happening now that banks will have excess liquidity in the system, surplus liquidity. Also, since the CRR has come, that is the credit reserve ratio, when that is down from 4% to 3%, the banks will not need to depend on deposits as much, right? Which means the deposit fees, I mean, deposit interest rate will also decline. Okay? So the CRR revision rate begins today, and with it begins a new phase of lending, so to speak. Rate cut transmission to get a push, banking gets 62,000 crores. Now, the banking, daily liquidity, daily surplus liquidity will reach 5 lakh crore as all the tranches are implemented, which will lead to the whole credit offtake and so on and so forth, right? At this moment, the banking has some problems, of course. We've talked about this. Viewers of Thinkers Frequency would remember that portfolio at risk for the unsecured loans is high, right? It's going up. It's going way above the other, um, the previous years, the previous quarters, and year on year, it's basically rising a lot. The portfolio at risk. This is due to unsecured lending amongst people who have more than one loans already, right? So, despite the banking system having cut uh, that particular play where they've stopped taking or giving loans to more than one uh, creditor, so to speak. So if a person has just one active loan right now and then he takes another loan, the banking system has sort of set an alarm to that kind of a practice. However, still the portfolio at risk for it's jumped as far as the whole uh, unsecured lending place considered. So these two things are happening. What that means is it augurs well with the prediction that we had made back in the 20th or 20 to 30th episode of Thinkers Frequency. We told you that the banking is gonna struggle for a couple of months, couple of quarters, and then from the third quarter it's gonna resume itself, right? And that's when the banking stocks and the banking industry as a whole will start showing better health in general. That's exactly what's playing out. So this particular play where the portfolio at risk for unsecured lending is high, it's already been solved for, but what you are seeing right now is some sort of a delayed result. Okay, so there's a latency as far as the whole data is being shared. Now this data particularly is June, is of June, right? So then there's July, August. So next month you're gonna find out that, oh, the portfolio at risk essentially has uh, sort of tapered down, which is exactly how it should be. So what's the time right now? It's 8:12. No, it's the time to look into the future, right? And that's what we do here. That's what we do here, right? I hope you enjoy that. I'm sure you do. That's why we are at the 104th episode. Speaking of looking into the future, US has renamed Department of Defense, Pentagon, as Department of War. Okay. Now, a lot of people might look at it as some sort of posturing or some sort of, meaningless renaming of something. But the beauty is that words matter. Good morning, says Mr. Satish. Good morning to you. The beauty is that words matter. Okay. How do the words matter? Words matter a lot. Everything aligns around the words that you, uh, you know, base yourself on. Everything. Basically, everything aligns itself around the words that you choose as far as the play is considered. So let's say if you have a Department of Defense, okay, there are two ways to look at it, by the way. Department of Defense to Department of War. The one way to look at it is if you have a Department of War, the department will essentially look at wars, right? If you name your department as the Department of War, what is it gonna do? Everything it does is around a war, right? So it's gonna start more wars. It's gonna lead to more wars. It was Department of War before World War II, right? That's when it changed to Department of Defense afterwards. Now, what happens when you name it Department of War? One way is that the whole department aligns itself to creating more wars, which is obviously a bad thing. The other way is war is a war today works on the principle of mutually assured destruction, right? MAD, mutually assured destruction. What that means is everybody knows that there's no point in a war anymore, right? You've seen all the cases, Russian Ukraine war, and so on and so forth. Every war essentially leads to a lot of problems. And when you've named it the Department of War, okay, you are essentially warning yourself of the mutually assured destruction play. And when you do that, you actually end up avoiding wars, which was not the case that was happening when you had a Department of Defense, right? In the Department of Defense case, what you were saying is that, oh, there's something happening in let's say coast of Venezuela or whatever, and then we need to defend ourselves because it's gonna be tomorrow. It's gonna lead to some sort of risk, some sort of security risk, right? So in the name of defense, you can actually uh, let's say disguise the culpability of what can be the result of your actions, right? But if it's Department of War and you're looking at another country, uh, you know what you're doing, right? So this particular play means that words matter. Now, why do we call it thinker's frequency? Why do we call it the daily mental workout, right? We could have called it like other people call it, right? News discussion or something of that sort. Why do we call it a daily mental workout? We call it a daily mental workout because that's how I want it to be, right? I want it to be heavy, I want it to be difficult, I wanted to actually build some muscles for me. Muscles of analysis, muscles of predicting better, muscles of understanding, muscles of insight, foresight, so on and so forth, right? And how do you build those mental muscles is by mental workout. So that's why we started positioning itself as the whole thinker's frequency play as a daily mental workout, right? And words matter. So your life, our life is aligned on the words which we anchor ourselves on. So that's uh, what's going to happen with Department of War. Very, very interesting play if you think about it. There's an interview of Madam Nirmala Sitharaman as far as the whole GST and economy scenario is considered. So people are thankful. The interviewer asks, "Are you getting thank you letters?" And she says, "Yeah, I got a bundle of it, right? Just today. Every day we are getting a lot of thank you letters as far as the whole GST situation is considered." So a lot has been said about the possible revenue loss for the government, which is slated to be around 48,000 crore rupees. People have said that it's going to be 48,000 crore rupees of revenue loss, and that's going to be a bit of a problem. However, Madam Nirmala Sitharaman, as everybody else, is saying that it doesn't matter because the cascading effects of this particular play is gonna more than make up for whatever revenue we lose, right? Because when people have more money in their hands and they consume more, consumption leads to investment. Investments lead to jobs. Jobs lead to more consumption. More consumption leads to investment, and so on and so on and so forth, right? So that's what Madam Nirmala Sitharaman has said. We've discussed it a lot at viewers of Thinkers Frequency would remember. She says that the way we actually in just 8 months we've had two major income tax strategic overhauls. One was obviously uh, the personal income tax, no tax under 12 lakh rupees, right? That was a great move considering India's working population and how much it earns. 12 lakh, no income tax, that was extraordinary. And then she says this GST thing, it's the next gen reform going to lift India's economy higher. Nobody, I think, can debate with it. Nobody can say something is wrong with that comment. Nobody, absolutely nobody can actually refute The only question is, how much is it gonna actually lift the consumption story? What will be the percentage point, right? And if the percentage points, the only bad question, let's say, or a risky question you can ask is, what if even this particular move doesn't, uh, push the consumption play up, right? What if it's not enough to make up for whatever we are going to face as far as the whole tariff situation is considered, right? Because no matter what Madam Nirmala Sitharaman says, this particular play also is a solution to that. She says it's not about that. We didn't do this reform because of whatever is happening in the global economy and to us. It's but that can be a collateral solution for it. So my point is, how much is it gonna actually move the needle is the question we need to ask ourselves. Because the banking thing I told you about, banks are going to be lending more at a better rate. People are going to have more money in their hands. Businesses are going to have more money in their hands. Consumers are going to have more money in their hands because things are going to get cheaper, right? Now, things can get cheaper in two ways. One will be really the cost coming down, inflation going down, right? Cost of goods going down because cars are going to be like 10% cheaper, right? Everything. So costs come down. The second way is the shrinkflation reversal, right? Where a particular product, let's say a food product at the bottom of the barrel, bottom of the pyramid, right? The cheap food product, uh, what they used to do with inflation was they can't raise the price because a Parle G is supposed to be $5. So what they do is just reduce the portion size. That's called shrinkflation. It's inflation, but with shrinking packet sizes. What they are going to do is reduce shrinkflation. Reverse shrinkflation. They're going to add more portion too. So a Parle G 5 rupee packet will be bigger, right? Because they can't possibly reduce the price from 5 to, let's say, 4.75 or whatever. So uh, that's the way people are going to be having more money. Shrinkflation leads to effects which are almost similar to what happens as far as price reductions are considered. So those two plays are very, very collinear, right? They don't sound collinear, they don't seem collinear, they seem like, oh, that's a trick, right? But they work in the similar way because there's only so much a person eats, right? So if he gets more portion size, his overall packets reduce and so on and so forth. So that's what's going on. She says when people are going to have more money, it's going to work out. And then she also says that the whole tax reform, essentially the tax certainty, which is gonna lead to more business opportunities, because it's not just changing the slabs, it's adding more certainty to the bills, right? Bill is also looking at replacing tobacco cess with a levy in the winter season. So the government is going to borrow money to make up for the revenue loss that states are going to have because of whatever is going on, right? So it's going to pay states. GST has two components, of course. One goes to the center, one goes to the state, and so on and so forth, right? So when tobacco's GST changes, it's going to come at like 40% GST rate. States are going to lose some money, the cess part. So it's going to continue for a while in that way while the government borrows money, and then the bill will replace the cess with a levy in the winter session. So that's what's going to happen with tobacco and these chewing products and so on and so forth, right? Very interesting if you think about it. Very interesting. What do you think? So all the consumer company guys are saying that we are going to start slashing the costs. We're going to slash the costs, ACs, TVs to get cheaper soon, of course, daily essentials, cars as well. But FMCG guys have a problem. Everybody has this problem, which is that what do we do with the old stock? We want some time to clear the old stock, right? Now, old stock worry. You remember, viewers of Thinkers Frequency would remember that the automotive industry was also talking about the old stock worry. You remember that? It said that we have like 6 lakh cars, in the stock, and we paid a cess for that. How do we get that cess back now that it's taken away, right? Because we're going to sell the cars at the renewed rate, and which has no cess as far as that is considered. what do we do with the old stock? So the inventory management is always a problem as far as changes are considered. Whenever something changes, whenever a policy changes, two things happen. What are the two things happen when policies change? Can anybody, uh, you know, can anybody can anybody give me a cheer on that? What are the two things happen? Two things that happen when a policy changes in a good or bad way, right? What are the two possible things that go on with countries, with companies, with consumers when policies change in this way? Can you guess? We've talked about this. We've talked about this a lot of times. You should remember. I hope you do. Let me wait for a few seconds and then I'll come to the answer. The answer is it's either deferred purchases or front loading. Okay. So whenever a policy is changing, either of the two things are gonna happen, right? Either the people are gonna be front loading that particular play. Let's say the prices rise tomorrow. What are you gonna do? You're gonna buy more of it today so that when the price rises, you don't have to bear the brunt of it, right? So that's called front loading, where you just sell it all at once, which is what India is doing to Europe, right now, right? Because from 2026, Europe says it's not gonna buy Russian refined crude petrol and so on and so forth, right? Now, that's front loading. What's the other thing that happens when, let's say, the policy is favorable? That's called deferred purchases, right? People just delay their purchase. They basically just say, we're not gonna buy anything. We're gonna buy it later when it's cheaper. Both the things cause equal amount of problems to people. Now, these people are saying that we want to clear the old stock. We have a lot of inventory in play. But people don't want to buy that, right? They want to buy later. So they want to defer their purchase, right? Because the price is gonna be less. If the price would have been like, oh, we are revising it upwards, then everybody would have been hoarding the stock, right? And both the things cause equal amount of problems. Companies seek approval to grammage changes, promos instead of frequent MRP relabeling. So they're saying, let's not relabel much. Some geopolitical chit chat. Mr. Trump says, we've lost India and Russia to darkest China. India and Russia to darkest China. Social media message comes, looks like we have lost India and Russia to deepest, darkest China. May they have a long and prosperous future together. So he's basically giving a warning sign that, hey, China is not your friend. China is nobody's friend. China has screwed the world and so on and so forth. Well, that was actually a pretty good narrative, and India actually benefited a lot because of that narrative. And that narrative started in 2016. So if you look at American right, that is American right wing, the political right, its perspective was that we are over indexed on Russia. Okay, we are bothered about Russia too much. Now, what that leads to is our lack of focus on the real adversary, the real challenge, which is China. Russia is a very tiny economy. It's a joke. China is like a bigger economy than US in PPP terms, right? So it says that the right said that this is where we need to focus. In 2016, Trump came and he had this wonderful policy where everybody was supposed to remove, detach themselves, or let's say decouple from China is the right word, right? Now, while that was happening, India benefited a lot because Make in India began in 2017, right? Mobile manufacturing in India began in 2017, and electronics manufacturing and all sorts of manufacturing started coming to India because everybody started talking about China plus one, right? So China plus one in a lot of cases meant India. It's a different thing where a lot of it went to Vietnam, and that was just a trick, right? So China set up its facade in Vietnam. All of those companies, essentially the Vietnamese guys, they were just getting everything from China and just sending it over, right? So they tricked the world. But China plus one meant something comes to India. Now that was great news, and that was right up the alley. Then 2020 came, and with 2020, what happened was India started, the US left came, the Democrat administration came back. It started getting back to the whole Russia play, right? It basically began the Ukraine and Russia war, right? The whole military industrial complex. What it did was it started a new war with Russia. So completely opposite forces. They began with the whole Russian thing. Then came 2024 when Mr. Trump came back, and it seemed like we are going to be back to focusing on China. The war is going to stop. They thought that they'll be able to stop the war pretty quickly. They stopped the Israel and Gaza, thing, Iran conflict. They thought they'll be able to solve the Russian thing. It didn't get solved, and what they did was they went heavy-handed on India. So they said their perspective was that hey, Russia gets a lot of oil from a lot of money from India because India is buying cheap Russian oil, and which is why Russia is being able to fund the war. China also buys it, so we've already tariffed China to the T. Okay, we've already placed China to the highest tariffs possible, but India we haven't tariffed so much. So let's tariff India, right? If we tariff India, India will stop buying Russian oil. Russia will stop getting money. If Russia stops getting money, the war will end, and we'll be able to say that we stopped the war, and we'll be awesome. We'll be back to focusing on China. In that move, what happened was India took it as a matter of principle, right? And Russia and India's relationship was sort of misjudged by those guys because that's it's been like an all-weather ally. Even with the 1970 war, Russia essentially placed itself that a war against India is a war against Russia, and that's how U.S. support to Pakistan stopped at that instant, right? So that was the kind of relationship. India didn't budge. Now, if since India didn't budge, they tried to do hammer on again, right? They said more penalty. Like India exports $100 billion worth of stuff to US. Half of it got tariffed, about 48, $50 billion. India got screwed, right? Because there's only one customer. Everybody knows that. India started warming up to China. Now that particular play essentially became the worst possible blunder for United States as a matter of geopolitical strategy, right? Now, the fact is, even now, that there's only one US, right? There's only US is the customer of the world. $30 trillion economy, majorly 70% of US GDP is basically domestic consumption, right? 70%. China's domestic consumption is what, 40%, 30 to 40%. India's domestic consumption is 60 to 70%, about 70%. 60, 62%, whatever. US is at 70%. 70% of $30 trillion, right? That's how much they consume. So there's just one US. And eventually, there'll have to be a way where India has to sell to US. Because 50% tariffs on about $50 billion basically makes the country uncompetitive, right? Now, till that time, India and China are warming up, and China is saying we'll absorb a lot of your stuff, and so on and so forth. And if that happens, US just loses the plot, right? So Trump's advisors like Peter Navarro and even the Lutnick person, they're going wrong. They're saying eventually India will come around and say sorry, and because US is US and so on and so forth. But it's obviously a catastrophic blunder because it doesn't work like that. So Mr. Putin said, you can't talk to India and China like that. Just like he literally said that. You can't talk to India and China like that. The era of colonialism is over, right? While this is happening, what's also happening is that US is talking to Europe, the EU, European Union, and saying that you should also punish India in a way we have, right? You should also tariff India the way we have tariffed, so that they actually stop buying Russian oil, right? Because what India does is it buys Russian oil, sends it to Europe, sends it to US, and so on and so forth. So if they do that to India, then India is totally screwed, right? Because then India doesn't have any market. And EU's BTA with India, bilateral trade agreement, is to end by this year's end, right? It's to get finalized by this year's end. So if that particular strategy is taken forward, India will be really hurt. However, what's also interesting is that if that particular oil doesn't come to the market, the whole price of oil essentially gets tumbled, right? It rises up $65. It could even rise to $100 and so on and so forth. And then everybody loses, right? Everybody loses. So things are very complicated. But on a domestic front, India has really, you know, shine. It's high mirror shine. India has really done the high mirror shine as far as domestic reforms are considered. Moving on, obviously, consumer companies are hiking festive marketing budgets. Mr. Girish Mathrubootham, Mr. Girish Mathrubootham has basically stepped away from Freshworks. Freshworks is the only Indian company that has went public in US, Nasdaq, right? So that's an end of an era. 15 years of building a company. It's worked really well, right? It is an Indian SaaS success story like no other. He's moved on and he says now that Together Fund is my new startup. Together is a venture capital fund started by Mr. Mathrubootham. So he says that that is my startup, right? So it's pretty incredible. A guy like that actually helping Indian startup entrepreneurs in a serious way, in a fully engaged way, is extraordinary. If you look at the good investors that have come out of India, you know, if you look at good investors that have come out of India, the best VC funds that have come out of India, the number one is of course InfoEdge. InfoEdge, Sanjeev Bikhchandani sir, you know, best investor of all time in India as far as startups are considered. Why? Because he has like an actual experience of running a company, and a company which is not exactly, has not always been green since the beginning. So he actually struggled, right? In my interview with Sanjeev sir, you know, you might have heard he said, I started the company, I started being an entrepreneur at 26, right? I got the idea of Naukri at 34. I got venture capital at 37 and the company went public at 40, right? So let's say the success story began when he raised the first venture capital fund. That was when he was 37. So 26 to 37, that's 11 years of actually, uh, you know, a real struggle, right? A guy like that actually knows what goes on in companies, because that, just imagine, not a struggle of not just 6 months, 8 months, 9 months, a year, 2 years, 3 years, 4 years, 5 years, 6 years. You're like, you know, literally banging your head against the wall for years together. Now, that experience is what makes a good entrepreneur and then also a good investor. So, Sanjeev sir, and then you look at Mr. Nitin Kamath, right? Great investor. Uh, Extraordinary investments happening as far as the whole Rain Matter fund is considered. Then, you know, now, if you look at Mr. Binny Bansal, again a very very good investor, supported very very good companies, Aether and many companies, right? He's done such great work, Mr. Sachin Bansal. All the good investors, most of the good investors essentially have been real strugglers themselves, because these people know, right? A person who's never done that kind of a thing, you can only hope that he has a perspective or he has the respect for that kind of struggle, right? The biggest problem with Indian VCs or people in Indian VC essentially is that these people have never really struggled like that themselves, and that's not necessary. But what's necessary is that they have respect for the struggle, which most of these people don't, right? A lot of these people don't. So that's what causes problem. But we are very lucky that Mr. Mathrubootham has Together Fund. We are lucky as a country that these kind of people actually look at investing in startups and not, let's say, in real estate, right? Which is what the earlier rich used to do in India, investing in, let's say, commodities or setting up commodity businesses themselves, right? So we are very lucky that the new uh, age entrepreneurs are following this path. Mr. Tiwari asks, what percentage of India domestic consumption depends on IT guys which export to US majorly? Okay, so what you are saying is that India's domestic consumption, which currently sits at 60 and odd percent of the total GDP, how much of it is relevant or related to the IT guys? So IT, it's a very simple calculation, Mr. Tiwari. So you look at IT, it's a $280 billion industry. So if it's a $280 billion industry, you can imagine $280 billion being fetched by Indian companies, majorly in India. Of course, a lot of such money is overseas because these people have offshoring operations and so on and so forth. But a reasonable part of it actually coming to India. Now, what is the gross margin? Like, these people work on a man and material, time and material model. So a lot of it is actually, uh, you know, uh, costs, or let's say money that comes to the employees, a lot of it. So if you look at their employee cost, it must be ranging at around 100 billion, 130 billion approximately. Now that 130 billion, 100 billion is essentially what these people earn, and what a person earns to what a person spends and what a person saves, the ratio is about 20-30%. 10 to 30% is the spending amount. So you can imagine $100 billion, $130 billion, leading to consumption of, let's say, 30-40 billion dollars, $40 billion approximately. Right now, that is the answer to your question. I hope you liked it. Good mental math. 1% of GDP, essentially, that will be, right, $40 billion. So you can do the math on how it translates to the overall consumption play, which is 60% of $4.2 trillion, right? I hope you like that. Moving on. SIS to widen security perimeter with 650 crore APS group buyout. Largest M&A deal in private security industry. Mr. Vaibhav Manocha asks, do you see Indian IT sector getting impacted by the USA next? Oh yes, Mr. Manocha asks. So US has said that let's put a tariff on Indian IT, right? Because these people make a lot of money from us. Now, these things, they can do that, of course. Uh, but Indian IT has so many troubles that you can, another one in the dust, right? So it's basically one more move which is gonna trouble Indian IT. Another nail in the coffin. The thing to note is that these things can only accelerate a particular trend which is already underway, right? The decline of Indian IT is already underway because of AI, because of whatever, because of the technological shift that is majorly AI, right? So their decline is already underway. What can happen with these moves is just acceleration of that decline, right? Now that whether they do that is, it's a very complicated calculation actually. What would they lose if they actually tariff this particular play, right? And how can you actually tariff a service like that? It's very complicated that way as well. They're already not very happy with the visa situation that Indians have, right? A lot of Indians go to US. 330,000 students from India go to US every year to study, right? Most of them actually go to settle, right? 330,000 students from India. And then there is the whole H1B and H2B and everything that Indians do. So a lot of Indians actually go there. They're not happy with that. So they might look at that, but it's very unlikely. I mean, I wouldn't, very hard to predict, honestly, right? Moving on. We were talking about SIS, India's largest business services company, is set to buy APS Group for 650 crore in what would be the largest buyout in private security industry. APS is ranked 6th in the segment, signing of binding agreements, formal announcement likely. So that's what's happening, right? SIS amongst top 10 global biz services firm in revenue and employee base. India, Australia, New Zealand, and Singapore. 40k employees. That's a lot of employees, man. Private security is a 1 lakh crore industry. 1 lakh crore, growing at a 12 to 16% CAGR. Private security, a very big business. What does it signal? It signals there's some sort of lacking, you know. Anyway, Ola Electric auditor has flagged lapses in internal controls at a subsidiary. Now, Ola Electric, once again under a bad news. The auditor says that a key subsidiary, which is basically responsible for noting down all the revenue, all the cost of materials, and so on, is essentially, they have some sort of governance lapses, some recording lapses. Did not have any appropriate internal control system for physical verification of scooters at its outlets and state distribution centers, leading to a material weakness at one of its wholly owned subsidiaries, the company's auditor has said. Now, I had said, if you remember, viewers of Thinkers Frequency would remember, that Ola is valued, at that time when I said Ola was essentially valued at $1.8 billion. Right now it's valued at about $3 billion. But that time I had said Ola is valued at $1.8 billion. Ether at that time was valued at $1.1, $1.2 billion, right? And I said Ether is catching up to Ola. And there's gonna be a time that when Ether actually overtakes Ola. And when it does, the valuations will flip. So from this will go from 1.2 to $2 billion. This will grow from $2 billion to $1.2 billion because Ola is essentially fading, right? And I said that it's going to take some time, but that's eventually going to happen. Now, while that happened, in one front, right, Ether kept growing up. If you look at Ether, it's now about $2 billion, right? $2.1 billion it's valued at. So that prediction played out very well. Ola actually grew in valuation because of some rigmarole with their numbers, right? It's now valued at about $3 billion, right? But now it's coming down. So it's at 2.7. So it peaked at 3. Now it's coming down 2.7, 2.8. And now this news comes, right? And now it's going to go even down. And there's going to be a time when essentially you're going to see that prediction play out exactly what I told you. Because as Sanjeev Bikhchandani sir said, right? A leopard doesn't change its spots, right? And Mr. Bhavish Agrawal has problems, unfortunately, right? No judgment on the guy, of course, hate the player, not the game. But Ola, the way it ran, Ola Cabs, the way it was essentially a Ponzi, right? Ola Cabs is a Ponzi. I've written very, very long and viral articles on this, so I won't repeat myself. But as soon as he figured out that Ola is a dumpster fire truck on steroids, what he did was he just escaped. He just parachuted out of Ola and started building Ola Electric, right? Basically giving his investors a finger. Essentially, if he was actually building Ola Electric on the back of Ola, right? On the back of Ola. So if Ola Electric was built on the back of Ola Cabs, because that was the captive network which was used to sell these scooties, right? And a lot of two-wheelers were essentially even bought. So if that particular play happened, he should have had his investors actually getting some sort of share in Ola Electric. Ola Electric should have been spun off, right? Instead of a new company, a fresh company with him owning like 90%. That was the first sign that this guy is something, right? The second version was when Ola Electric started beginning and it started going like making news in all sorts of wrong ways, right? Particular loot going on with that play. When that happened, and then that bubble essentially got it started posting itself. Oh, live stream offline happened. What's going on? What's going on? Okay, I'm back. I'm back on YouTube. I'm sorry, guys. I don't know what happened. Can you hear me? Can you hear me? Am I back in the true sense? Is my connection okay? Is everything okay? The stream status is still poor, so I don't know what's going on. What's happening? How are you valuing it, sir? Asks Mr. Ashutosh Bhandekar. Well, I'll come to that, Mr. Bhandekar. I'm just worried about my YouTube stream. Just 1 second. Something wrong with my internet, I think. Yes, audible. Great. Okay, we're back. It's still showing that there's something wrong with my stream. I'm sorry about that, but I guess it's okay now. So yeah, so we were talking about Ola. He left no money for the retail investors. He cashed out at the top of the tree, right? And then what happened was, uh, when that balloon started to burst, he began another new company called Krutrim, with again, you know, built on the back of the previous companies. But so, as Sanjeev Bichhandani sir said, a leopard doesn't change its spots, and you can just guess these things happen by the way as the company is going on, right? So no surprise, no surprise. Now coming to the question which Mr. Abhas Dua has asked, how are you valuing it, sir? How am I valuing what? Ola Electric, Ether? What are you talking about? I need to know exactly, and then we can have a discussion on that. But let's move on. Bank of Baroda has also termed the Reliance Communication loan a fraud, which is really trouble, big trouble. Moving on. Some political chit chat, which is basically useless. We've discussed enough about GST. A very interesting article is being placed about the research industry, R&D, right? R&D essentially is looking at some sort of, it needs some reforms, right? R&D. India doesn't spend a lot of money on R&D, unfortunately. India spends basically 0.7% of our GDP on R&D, if I'm not wrong. Yeah, India's gross expenditure on R&D has been stagnant at 0.6 to 0.7% of GDP for several years now, far below the global average. It is 4.93% for South Korea, 3.3% for Japan, 3.4% for US, and 2.4% for China, right? Now, India's R&D expense is low, and then on that R&D expense, the problem is how it's spent and the red tape and everything as far as the implementation of that spend is considered, right? That's a problem. Mr. Abhas Dua has asked Ola Electric and Ather. So it's a basic revenue multiple, way. Because both the companies are right now in negative, net negative. They don't make net profits, so you can't go do an earnings, price to earnings kind of a ratio for them. So you do a revenue multiple, and then you judge that revenue multiple with, let's say, global or local peers. That's how you value companies, right? And basis stage of a company and the room for growth, the growth rate, possible growth rate, you essentially see what revenue multiple is fair. Okay, so let's say if a company has a revenue of $1 billion, but it's growing at 40%, but there's a company at a revenue of $10 billion, but it's growing at 6%, you will value them differently, right? The revenue multiple to enterprise valuation will be a little different. right? Because there's more room to grow here. So that's how you value companies, and that's how we valued Ola Electric and Ather as well. I hope you understood that, Mr. Dua. Moving on. So what we were discussing was the R&D spend which happens in the country. We spend 0.6 to 0.7% on R&D, right? When Japan and Korea and China and all these people are spending like 2.5, 3.5, 3.3, and so on, 4.9%. Now similar situation is with defense as well. We spend about 1.9% on defense of the GDP. China has some 3.5. Global average around is 3.5. Even Pakistan has 2.8, and so on and so forth. Now the trouble is this particular spend, how it is actually implemented is also a very big issue, right? So rule book, red tape, low funding bogged down top institutes government assessment. So they say the situation is compounded due to limited private sector contribution or even philanthropic contribution to R&D. 30% of total gross expenditure on R&D compared with 70% in leading economies. So Indian corporates have been especially, uh, you know, uninterested, let's say, in making contributions to R&D, right? Global average stays at 70% coming from private sector of the total contribution. Uh, in India, it's 30%. So 70% of the 0.9% of Indian GDP, essentially $30 billion, 35 billion is coming, total $35 billion, 70% of it is coming from the government, right? $21 billion. So the entire private contribution to R&D is about $10 billion, right? Less than $10 billion. So they say that this needs better participation, and much is due to restrictive income tax laws which have reduced incentive mechanisms over the years. So there's income tax law act allowed 100% deductions for philanthropic donations, but now it's reversed. So that's a problem. As much as 150% under this was phased out. Rigid framework for R&D grant utilization, which requires funds to be directed only under specific budget heads and not suited to dynamic nature, that also leads to problems. Grant rule outlook, they say it takes like 1.5 years for a grant to get processed. So let's say if you start doing an R&D project and you get a grant, or let's say you apply for a grant, it takes like a year and a half for you to actually get that money. By the time what you were working on is obsolete, right? Because R&D by the nature of it is very dynamic, right? It is long term, but it is dynamic. So you can expect what kind of a sad show it is as far as the whole R&D play is considered. I've always said that India needs to make a lot of investment in defense, because, or industries like defense, because once those kind of industries are flourished, R&D will flourish. You remember what I've told you? I keep telling you that India needs to spend more on defense, because defense is by nature strategically relevant and inward looking industry. What I mean by that is you can't outsource parts of defense to people, right? If you start manufacturing something, it's so sensitive that you'll have to develop that intelligence in a vertically integrated kind of a way, right from the bottom, right from steel, right from glass to advanced software going into the drone. You'll have to put your brain into it. So that will lead to a lot of investments as far as R&D is considered. The frontier technologies, especially defense, will lead to a lot of good things as far as the whole R&D play is considered. I hope these people listen to Thinker's Frequency and then we see this particular bit happening. Moving on. GST reforms transformative, ensure tax certainty, says CBIC chief. No problem. We've talked a lot about this. Government to greenlight incentives to drive green steel output. So we've talked a lot about this. There are two kinds of steel manufacturers. The one is primary steel manufacturer, one is secondary steel manufacturer. Primary steel manufacturers are the advanced guys, right? These people are the big guys. Essentially, they use a better technology. So I'll tell you what the technology primary steel producers are those who use oxygen-based blast furnaces to make steel, while secondary steel producers use electric arc furnaces or induction furnaces to make steel, right? So now if you're trying to do green steel, right? We've talked a lot about green steel in depth. Viewers of Thinkers Frequency would remember. So you've got to incentivize both players. Now this particular scheme is going towards the secondary steel guys, the low end guys, right? So push for steel sector. Secondary steel uses rudimentary tech, emits more. Scheme to incentivize and upgrade efficiency. Secondary steam is 50% of the output. So both primary and secondary steel are essentially contributing at the same level, but obviously secondary steel guys are smaller, so there are more number of people. Proposed scheme outlay 5,000 crores. Best technology adoption rate is 50 to 60% in primary steel, less than 50 in secondary steel. So this is very important. We talked about how the steel guys were saying that the energy that we get from the furnace, the green energy that we get from the furnace, and we use that energy to actually power the plant, should actually be used to reduce our dependence of green energy, which we have to take from outside. So the good steel manufacturers, what they do is the heat that they generate, the sink heat, is used to generate electricity, which is used to power the plants, right? Now that is obviously green energy. Now if they are generating that green energy, have made that investment and using that particular play to actually lower the overall energy requirement, that should be rewarded, right? So they asked for a reward where they said reduce our dependence on or reduce the norm which says we have to buy, let's say, X amount of green energy from outside, because we are generating this green energy, right? Otherwise we would just let that sink off, right? And what would have that led to? Moving on, we've talked a lot about SpiceJet sinks into losses in Q1, fleet operational issues. We've talked a lot. Airline industry never makes money. We've had big discussions on airline industry, right? How to be a millionaire, start as a billionaire, and then start an airline, right? That's the way to go. If we see price to sales of Ola Electra is one multiple less than Ether, than the multiple of Ether. Yeah, says Mr. Abhas, though it's in reference to the previous conversation that we had. But what you've got to do, I can't check that number, but what you've got to do is look at the curve of that sales number. Is it going up? Is it going down? It's going down. So actually they need to have an even lower number. If the revenue is declining, if the sales number is declining, right, it cannot be as valuable as a company which is growing in revenues and with a better technology, with a better received customer product, with a better technology platform at which these people are making better safety profile, better profitability profile, and so on and so on, right? So I hope that helps as far as the Ola story is considered. Moving on, so we were talking about SpiceJet. SpiceJet has sunk into losses, no surprise there. Oyo's Q1 profit doubles on strong premium brands cost control. Oyo is essentially now a GCC company. Most of the money that it's making is coming from outside markets. The hotels that it acquired, G6 Hospitality from US, and then something in Europe, and so on and so forth. So that's making all the money. The guys from G6, right? A lot of hotels, like 60, 70 hotel owners from G6 US reached out to me talking about the ill practices of Ola and how it's ruining the G6 brand, and how I should write about it, because I've written a lot about Ola, right? Ola is also something I agree, I believe the leopard doesn't change its spots, as Sanjeev sir said. It applies to Ola as well. A very shady company, has been that way since the beginning. But you know what Ola proves? Ola proves the infinite monkey theory. The infinite monkey theory says that a monkey which is hitting the keyboard at random, right, will end up writing the Hamlet someday. He'll write the Hamlet someday. So he's just, doing this on the keyboard, and someday he'll be, doing this, and it'll be like a perfect Hamlet, right? Hamlet is a Shakespearean play. So if you are into movies, Heather is based on Hamlet. Lion King is Hamlet in the jungle. Dune is Hamlet in outer space or whatever. Uh, Hamlet is everywhere, right? Hamlet has been made so many times. It's a good story. But anyway, the point is that the monkey's gonna someday write the Hamlet, right? Infinite monkey theorem says infinite time and the monkey will write the Hamlet. Now, the startup equivalent of this is if you raise infinite money, you're gonna someday figure out a way to make a business which makes more than it spends. Simple, right? Because infinite money, time is money. So by reflexivity, money should be time, right? So infinite time, you write the Hamlet. Infinite money, you get infinite time, you get infinite opportunities. Someday you will make a business which will find a way to make more than it spends. So you start as a tech company in the hospitality space, right? And a marketplace of hotels. You say, oh, this particular biz is not that different from, let's say, whatever is happening. So, but you've raised a lot of money. So you start managing those hotels. A terrible idea, the worst idea in the world, to actually say that we can provide a standardized service across the nation of small mom and pop play when five-star hotels are not being able to do that, right? With limited inventory, with a lot of control, with a lot of training, with a lot of education, with a lot of hotel management spiel going in. So somebody comes up with a dumb idea saying that, hey, we'll organize all these players, we'll make them uniform. Doesn't work even on paper, but since you've got so much money, you actually do that, right? You go inventory led. Then comes COVID, you burn all the agreements, right? Force majeure. You essentially say, hey, we can't honor those agreements anymore. Fresh start. So you change again back to this particular play. But there's no money in this play, right? You can't get valued. So what you do is you raise debt and you actually buy a motel chain in US and a motel chain, let's say something in Europe, right? And you do back operations in India. So essentially you have those chains running in US, making in dollars, and then you're showing it somehow making the company seem valuable. So it's a dumpster fire truck on steroids, has always been, but somehow they've apparently figured out a way to make more than they spend. Some comments there. I think you're talking about Oyo, right? Nishant, not Ola. Yes, Mr. Deepak Gurram. Mr. Deepak, indeed, I was talking about Oyo because they claim to have doubled their profit on strong premium brands and cost control. Mr. Dua says, yes, sir, the vehicle registration is going down since March 21 at peak of 50,000 registrations, now 8,647. February source Vahan. Yeah, Mr. Dua, I know. So at one time, Ola had like a 50% market share. It's now down to 17%. Ather at one time had like an 8%, 7% share. It's now up to 17%. So you can judge the curve, right, where it's going. Moving on. You can look at these things. So this is what we do here. We make predictions. We actually analyze things and we analyze them so deeply that we actually want to look into the future, right? So daily mental workout. Viewers of Thinkers Frequency, Mr. Tiwari and the regular viewers, do you think we should incorporate this particular thing in our branding, right? The whole prediction angle of things. Should we do that? Anyway, moving on. A lot of 102-year-old oldest person to summit Mount Fuji in Japan. Kokichi Akuzawa almost gave up during his trek to become the oldest person to summit Mount Fuji at age 102. It's a Guinness record. I was really tempted to give up halfway. Reaching the summit was tough, but my friends encouraged me and it turned out well. I managed to get through it because so many people supported me. He had his 70-year-old daughter and his granddaughter, her husband, and 4 friends from a local mountain climbing club. The climbing party camped for 2 nights before their ascent to the top of Japan's tallest mountain, which peaks at 3,700 meters. Akusawa said he doesn't take any mountain for granted. It's better to climb when you can. Now, this type of thing can only happen in Japan. Japan is the place with highest number of centenarians. Centenarians basically means people over 100 years of age, right? So, and Japan has also got most number of blue zones. Blue zones is where these people exist, right? So Japan is just a different place. Highest life expectancy. Japan's life expectancy is about 85, 86 or 88, in that range. Compared to that, India's life expectancy is at 69 to 71. It was 69, got revised to 71. So if you're in Japan, if you were born in Japan, you would automatically have like some 15 years, 14 to 15 years more of life and healthy life. So 102-year-old guy has climbed a mountain. All respect. Japan, the most beautiful place in the world. Moving on. Alphabet is nearing the $3 trillion in market value because the company it had an antitrust suit on it, and they were saying that they're going to break up the company, and that was huge. So now that's off. So people are saying that, hey, Alphabet is gonna be a better stock. So 3 trillion. Right now, Nvidia is at 4 trillion, Microsoft at 4 trillion. Then there are other companies. So speaking of companies, Mr. Raju Kumar has a comment. 87 years old for women. Yeah, Japan is just next level, right? Just next level. It's extraordinary. Nothing comes close, right? It's a different planet altogether. Life expectancy in Japan. So Tesla has planned a $1 trillion payout for Mr. Musk, and it's basically set on conditions like if the company crosses $8.5 trillion in market cap and so on and so forth. Mr. Musk had a similar payout package devised for him, a $50 billion payout package. That was also a milestone driven thing when the company achieves some unreal, right? They're saying $8.5 trillion valuation, market cap for Tesla. When that happens, he's going to get $1 trillion. So he's gonna get $1 trillion, $1 trillion if Tesla becomes an $8.5 trillion company. So unreal target, unreal package. This is what happened with him with the $50 billion thing is concerned. But that was essentially, that turned out to be a very sad episode because the local judge, the Delaware judge, they blocked that payment. So they had to find another way to give him some different kind of a stock award to actually give him $30 billion, right? So is he going to be the first trillionaire, Mr. Musk? What do you think? Is he actually going to be the first trillionaire of the world? Yes, I think so. I think so, right? Moving on, we were talking about Japan. Import tariffs on Japan cut to 15% from 25%. So US has cut its import tariffs on Japan 15%. Japan is investing $550 billion in US. That's huge, right? And if Japan and every other country gets better tariff situation than India, why would they invest in India, right? Why would they make factories in India? That's a very sad thing. Speaking of India and America and Japan, America's job reports have come out and they're not pretty. For the first time since COVID, US has more number of applicants than number of open jobs. That's a new, right? The job additions have fallen down 72% from July. Now this is not that bad as they are making it out to be, but it leads to a good news. So can you guess what good news will it lead to? What good news will it lead to? Can you guess? This particular job report, which is less than ideal, but not that bad. And Trump says you don't have to worry about it. The next year's job reports will make you go crazy, right? Because a lot of companies have invested in America, and a lot of companies are making factories in America. So the next year's job report is going to blow your mind, is what he's saying. But what is the good news that is going to come out from this news for America? Can you guess? Have you been following? Viewers of Thinkers Frequency would know, regular viewers, right? The rate cut, the fight between, the fight between Jeremy Powell and Mr. Trump. You remember? Mr. Jeremy Powell was called by Trump as, I quote, a moron, a slow guy, a stupid person, and so on and so forth. He said, we need, we need the rate cuts. So Trump said that, hey, do the rate cut. This country, the inflation is low. US had like a 2.1% inflation. So inflation is low. You do this, right? Just make the rate cut happen. And this person said, no, we don't need to look at the rate cut. We need to manage the inflation situation. And now the job reports came out, and new fewer jobs could be, came out, right? And then this guy will be forced to actually implement a rate cut, because when a rate cut happens, businesses get money to borrow. If they get money to borrow, they start hiring people, right? That's how the whole rate cut works. So was Trump right about that? I guess so. Mr. Tushar Tiwari says, after 100 episodes, I think tech glitches started. Kala Tika for an evil eye. You're so right, Mr. Tiwari. I didn't, this is the second time we faced that kind of a thing. But I did the good thing. Instead of going to the OBS, I just refreshed YouTube here itself, and then it came back. So this particular glitch was not as bad as that one. That one really screwed us up, right? 102nd episode. Moving on. EU fines Google $3.5 billion in ad antitrust case, which was going on. No, it's not your laptop or your TV, Mr. Kumar. It's mine. So there's a thing, right? My laptop is connected to the phone, and then the phone streams it to the laptop, right? That's how you get the better audio and the better video. Now, while that happened, it's done by a software called OBS. Now, OBS essentially links the phone, right? So there's the virtual phone which is running on the laptop as well. So let's say if something happens on the phone, it starts displaying on the laptop. And when that happens, the connection sort of starts breaking, is what I've started noticing. Shouldn't happen. Moving on. Gold hits records high as weak US job data fuels rate cut bets. So gold is going high. We've talked about how gold essentially is the proxy for geopolitical instability, for economic instability, and so on and so forth. Gold is high, man. So we've talked about this. You remember I told you like 10-15 episodes ago that we are going to see gold going up because the war is not looking at getting stopped anytime soon. That's when Trump and Mr. Putin met. And when they met, right after the next day, Putin had like a bombing effort on Ukraine. And we said that if this is the sign, there's no sign of gold coming down. Gold will come down when this particular war stops, right? And also there's some sort of economic stability as far as the play is considered. So rate cuts, gold hits high record. With high gold, you know what's going to happen? Muthoot Finance AUM will rise, the gold loan AUM, because when gold rises, the loans on gold also rise, right? Rupee is falling off against dollar. Madam Nirmala Sitharaman says it's only the dollar that we are falling against, not everybody else. Emerging markets currencies are not going we are pretty much how we are, but we are gonna fix it, right? So what RBI is gonna do it is probably gonna have some sort of exchanges of dollar to rupee. It's gonna buy some rupee, reduce the liquidity, and when it does that, the rupee is gonna moderate a little. But how much can you moderate at 88, man? 88 is too much, right? We've talked about how this particular thing affects everything, right? When your currency goes down, it could be a deliberate move as well, because it's a move to counter the tariffs, right? Because when you devalue your currency, your exports become cheaper. When your exports become cheaper, they become more competitive in the market, right? That's how China grew. That's how China essentially ruled the whole export market. It devalued yuan so much that the rest of the world was basically uncompetitive, right? So maybe it's intentional, you never know. But it's hard to guess that it's intentional, because India is not an export-driven economy, right? India is an import-driven economy. India is a consumption-driven economy. India doesn't export much. So whom are you going to support? The tiny percentage of people who are actually exporting, or the rest of the economy? So they're trying to do both with the GST and probably with the rupee, plunging. But it's totally speculation. I don't say that it's intentional. I'm saying that it's possible that this kind of a strategy could be viewed as an alternative or let's say as a step to deal with the situation. Not saying that they are actually, doing that. Apple sales have hit $9 billion in India. $9 billion is a lot of money, and a lot of what Apple is selling in India is made in India, a lot of it. So thank God for the smartphone manufacturing program which began in 2017, right? 8 years, it's 2025, right? 8 years hence, we are seeing the beauty of this particular project, right? It broke even. I think it broke even. The whole program, it was losing money in the beginning. The government was subsidizing everything. The curve looks like this, right? This is the zero line. The curve looks like this for the first 5 years. So in 2022, I think they made the first profit, the country. Moving on, urban company. We've talked about urban company. We've written about urban company. So equity indices flat as IT weaknesses offset auto gains. Well, IT. So viewers of Thinkers Frequency, are you happy for being warned on IT stocks? I hope you paired all your IT holdings, because that would not have worked out for you, right? And if this benefited you, you're welcome. So forex reserves are high. Yeah, that's it, ladies and gentlemen. We have come to the end of the 104th episode of Thinkers Frequency, our daily mental workout, our daily dose of insights and analysis which don't lead to paralysis right before we punch in. It's 9:21. We've gotten late. This is the longest episode thanks to the glitch. God damn it. 1 minute, 1 hour, 20 minutes. But I hope you had fun. I hope you loved it. I loved it. I love talking to, discussing this. This is very nice. Mr. Satish, I need to thank Mr. Satish, Mr. Tiwari, Mr. Manocha, Mr. Kumar, and on LinkedIn, a lot of comments today. Mr. Dua, Mr. Deepak Gurram, Mr. Ashutosh Bhandekar, and so on and so forth. And everybody else who watched. So thank you so much. I hope you liked it. I hope you have a beautiful day personally and professionally. I'll see you tomorrow, same place, same time, hopefully. Take care.